Good morning, everybody, and thank you for joining us this morning. My name is Ron Betchler, Executive Chairman of MarketEye, and I'm delighted to have with us today Tim Harris, CEO of Redflow, and Tim Harris, Group CEO of Redflow, Mark Higgins, CEO of Redflow US. Just a bit of housekeeping. We will have a short presentation or a presentation from Tim and Mark on where Redflow is at in terms of its technology and market development and the growth that it's seeing in the US. And post the presentation, we will be open for Q&A. If you have a question, please type it into the Q&A box. I will be moderating the Q&A. We are fixed on time. We have 45 minutes allocated today. So we hope we'll get through all the questions afterwards, but I do apologize up front if time means that we just can't cover off all the questions that you'd like. Tim, I might hand over to you to take us through the slide deck. Thank you very much.
Great, thank you, and good morning, everyone. Thanks for joining today, and I hope we can have a fruitful session this morning. As Ron mentioned, the purpose of today's session is to really provide an update on our commercial strategy since we last updated the market on the basis of our half-year results back in February. There's been a lot that's happened since then, and including the appointment of Mark Higgins to lead our efforts into the US, and I'll allow Mark to address his views on the market later in the presentation. Ron, if we can just go through to a couple of slides, if we can, please. Just firstly, setting the scene for everyone. I take it that a lot of the people in the audience here are very familiar with the role of energy storage and how critical it is for us to enable a net zero future sustainable based world. But what we can see from more and more reports coming out is the accelerating drive around energy storage, growing at about 40% year on year. So we're in a great market to be in. But the second point I want to reinforce to everyone on the call here is that the nature of that energy storage mix is also changing significantly. As we get more and more renewable energy starting to hit the grid, the need for energy storage is starting to move from stabilization to optimization. And therefore, we see our role as a flow battery focused on that 4 to 12 plus hour range, that the market is steadily and increasingly becoming very, very attractive to us. And that's reflected in some of the market opportunities that we're seeing in front of us. If we just go to the next slide, please, Ron. As many people on the call know who have been long and loyal shareholders of Redflow, you know, we have been on a journey for Redflow since we were established and enlisted on the ASX back in 2010. But we believe a lot of that effort and time and money that we have spent on our technology and our company actually has a strong value proposition compared to where we see other participants in energy storage outside lithium starting to form. As you can see here, you know, since 2018, we've really started to accelerate some of the core capabilities. We think that it's going to unlock this amazing technology that has been many years in the development. And key highlights of that, we think, is around Gen 3, that we're still on target to be launching by the end of this financial year. But critically also, our journey into larger systems and our reference site in California with Energia at 2 megawatt hours, that is allowing us to play in the large C&I market and potentially then start to lean into the utility market as well as part of our strategy. We were delighted to launch the US team early this year after working with Mark for the best part of a year. And when you look at our operational profile and history, we've got some great numbers there in terms of showing how our technology can work in the field, generating over 2 gigawatt hours of energy and having 10 million hours of field operations since 2018. Next slide, please, Ron. And as part of this, really what we are seeing as a result of the market dynamics that I talked about before and the increasing recognition that we are credible at large scale, we are seeing a surge in opportunities for us, particularly in the US and Australian markets. What we have here on this slide is a selection of sales opportunities that we're spending lots of our discretionary time into. And you can see there's a wide depth and breadth of opportunities that we're focusing in on in Australia, but also some amazing and exciting opportunities that we're starting to see in the US. Just a couple of examples of those. In the middle there, you'll see that we've been working with a US Fortune 500 US financial company that we were included in an RFI that we announced to the market back in July 2021, we were named as the preferred energy storage for their bank branches. Our discussions have been ongoing and deepening around that, and we're now in scope to be also included in terms of their operation centres, of which they have multiple ones of those in the US and also overseas markets. So whilst it's a longer sales cycle, the size of the opportunity that we are seeing with some of these companies, we think is very exciting. And maybe a second example that I can refer to is what we announced to the market back in March, which is the LOI that we signed with Energia for an extension for a new phase 2 project with them for a 6 megawatt-hour project in Victor Valley in California. This builds on our successful 2 megawatt-hour project, which is our reference project in California that we were delighted to launch in January of this year. The EPC has been down selected for that, and we remain the preferred energy storage provider. So our largest customer coming back for repeat business for a larger scale project, which is 3 times the original size, we think is a strong indication, A, of the market opportunity for us, but B, the support that we're getting for customers around our core solution. Mark, would you like to highlight any other opportunities that you see in this slide?
Thanks, Tim. I appreciate it. So over the past year, as Tim mentioned, we've been spending a lot of time building a robust partner ecosystem in the US and elsewhere in the world. That's beginning to pay dividends in the form of a really strong commercial pipeline. And you see select examples of this here. Just to kind of highlight a few, we've developed some very solid relationships with independent power producers in the United States that are now starting to yield project opportunities. We've seen a number of utility scale opportunities in the 2023 to 2026 timeframe. One of them's highlighted on here. It's a 600 megawatt hour project that we are participating in a process for them to identify a flow battery solution for. That is an exciting opportunity and is representative of a number of opportunities that we're seeing in the US around the utility scale front that we're very excited about. We also have been working quite a bit with a number of engineering firms and commercial and industrial project developers around similar types of projects to what we're seeing with the Energia opportunity. We've been seeing we're working on a corporate campus opportunity in Arizona. We're working on a US federal government installment in California. These are all very large projects by the standards of what we've historically installed, but very much in line with the kind of credibility that we've built up in the market as a result of the successful deployment at Energia and the increasing profile that we have in the market here. And then back in Australia, I'd say we're also very focused on these much larger customer classes. Large mining companies are a good example of that. We're seeing a number of multi-hundred megawatt opportunities with mining companies in Australia, as well as for other opportunities around the world. And now, as we move into these larger projects that we're talking with customers about, we're naturally seeing longer sales cycles, but that's really starting to pay off. We've been seeing we're in the very advanced stages of discussions around a number of projects globally that are kind of order of magnitude larger than what the company has historically been deploying.
Great, thanks, Mark. We'll just go on to the next slide, please, Ron. So bringing all those things together, we believe that a lot of the time and effort that we've been spent over the last 2 or 3 years and successfully navigating the challenges around COVID are putting us in a great position to leverage the opportunities and the credibility I think that we've now had with over 200 plus active deployments, plus also the Energia projects that's serving as a really strong reference point for large scale opportunities. I think we've had about 3 or 4 tours by EPC companies and end customers of that site. So it's really kind of paying dividends in terms of our visibility and credibility. But when you take a snapshot of us as a business and where we're placed at the moment, we're very excited about the future ahead. As I mentioned before, Gen 3 is on track to be launched into our production environment by the end of this financial year. And the modular scalable solutions that we have, we think is putting us at a strong competitive advantage compared to other energy storage solutions in the market. We're still investing in our IP and our intellectual property moat that we think is going to pay the dividends over the longer term. And with our Thailand facility, we think we are very well set up to be able to go and execute with what we hope is conversion of some of the sales opportunities that we noted in the previous slide. When we take a strategic view of our company and our focus on zinc bromine as a core chemistry in our fly battery, we're very excited about the core cost advantages that focusing on this type of chemistry will bring us at scale. And that's a particular interest to a lot of the customers that we're talking about, which is, at what point can you drive down your cost at volume? And we're very confident about our ability to do so, to have an extremely competitive product, both from a CapEx perspective and from a levelized cost of storage perspective in the market, based on some of our characteristics, such as 100% depth of discharge, operating in high temperature, and lack of thermal runaway risk. So overall, we think we're very excited about the future and have set some firm foundations for where we are today. Next slide, please, Ron. Just to reiterate, Mark is the latest addition in terms of a strong team, as President and Chief Commercial Officer of the whole company, but President of North America. And I'd just like to note, we have a strong board that's supporting the management team, including Brett, ex-General Counsel of Qantas, but also John Lindsay, a current Director of Unity, and David Knox, who's the Chair of Snowy 2.0 and ex-CEO of Santa. So it brings extremely strong depth and breadth of experience that we can take to this company as we start to look at the next inflection point of growth. Next slide, please. I'd just like to take a minute to introduce Mark. I'm personally delighted that Mark has come on to work for us full time after working for us as an advisor since early 2021. After we had announced Energia and was starting to look about how we can be successful in the US. Mark brings a huge depth and experience around energy storage and renewable energy in the US. He's currently chair of the US Department of Commerce Renewable Energy and Energy Efficiency Advisory Committee, and has held a number of previous executive roles at Strategen, PG&E, Sun Edison, etc. And underneath Mark, we're also starting to bolster our US team with a number of selected individuals that have some very deep experience, not only in the renewable energy space, but also particularly around fly batteries that we think that we can leverage as we start to steer into this growing interest of non-lithium solutions in California, the US, and also the rest of the market. So I'd like to hand over to Mark to give his perspective on Redflow and maybe where we are and his perspective on the market opportunities that we're seeing in front of us. Over to you.
Thanks, Tim. Well, first of all, appreciate the kind words. I am delighted to be at Redflow, and I'm really excited about the market opportunity that we have, particularly in the US market. I think the timing is now. The time is right for Redflow's solution here in the US market, and I've been very excited to work with Redflow on the market opportunities over here. The thing that's changing in the US is that the market is increasingly looking beyond lithium. This is a global phenomenon, but I think a lot of this has really started in the US and particularly in California, as we're seeing an increasing level of renewables on the grid. There is an increasing interest in longer duration technologies that, frankly, lithium is just not that well suited to address. So we're starting to see large-scale procurements from utilities for long duration and particularly non-lithium solutions in the market. Technology diversity is valued as well in our market from a resilience standpoint. There have been increasing and ongoing supply chain challenges with lithium delivery. We're seeing oftentimes developers are finding projects are getting delayed, pricing is getting reset, and prices have been increasing for projects that are being making use of lithium-ion batteries. And also there have been a number of safety incidents with lithium batteries that have been cause for some pause in terms of people being willing to just go with lithium without looking at alternatives. And that's caused an increase in customers, both at the utility scale as well as commercial customers who are really looking for more fire-safe solutions like what Redflow can provide. There's also quite a bit of funding available in the US market, particularly in California through the California Energy Commission, but the Department of Energy as well has a good deal of funding available for building out supply chains, for non-lithium technologies, and for energy storage, broadly speaking, that we're very well positioned to be able to access. There's other funding sources globally. ARENA has funding within Australia, but within the US, there is a particularly robust source of non-dilutive funding for the company, as well as project level funding for some of the opportunities that we're looking at. Next slide, please. So I think, as I mentioned in the previous slide, we're definitely seeing structural challenges around lithium. What is good for the electric vehicle market in terms of increasing deployment of EVs around the world is perhaps bad for grid-connected energy storage in the lithium space. We're seeing a continued supply-demand imbalance within the space that's caused prices to go up quite a bit for lithium batteries. You're also seeing core minerals pricing going up substantially within the lithium chemistry space in particular, with lithium and cobalt going up quite a bit over the past 2 years. We're not seeing nearly the same supply chain constraints that the lithium space has seen. Zinc has gone up a bit. Bromine, one of our core minerals, has actually dropped in price over the last couple of years. And next slide, please. Medium duration storage is really the next generation of storage that's going into the grid. The first generation was shorter duration applications that were really to help provide grid stability when prices for lithium ion batteries were high. Short duration was really all that customers were willing to pay for. However, the price of batteries have come down a lot, including the price of non-lithium solutions. The need has gone up for bulk energy shifting, which is, if you think about it, solar generates during the middle of the day. Oftentimes, the greatest need for energy is in the late afternoon into the evening as people are running their air conditioners. Flow batteries are really well placed to take large amounts of energy over many hours, moving it from that midday solar peak into the evenings when customers are needing the energy the most. And that is really where we see the greatest demand for batteries over the next 10 years. In the longer term, you'll see a need for even longer duration solutions, but we see that as a market that's probably 10 plus years off. Tim, anything else you want to add on this slide?
No, I think the only thing I would add is, we see energy storage being a zero-sum game. I was with a customer yesterday that was talking about using lithium to manage the troughs and the peaks of energy, but using flow batteries as baseload. So forward, we clearly, benchmark ourselves against lithium from a pricing and just knowledge and technology basis. But as we move forward, I think a different category is emerging that's going to sit alongside lithium that is going to be increasingly in demand. Back to you, Mark.
Thank you. Next slide, please. So one of the things that I'm most excited about Redflow is how we are competitively positioned within the non-lithium space. I think there's been a lot of hype about energy storage in the market, and particularly around new technologies coming into the marketplace. The fact of the matter is that Redflow has actually been quietly deploying for well over a decade. We have more than 400% more active commercial deployments in the market than our closest peer. And that gives us a wealth of knowledge of in vastly different operating conditions, 9 different countries around the world. We have well over 200 installed energy storage systems in that have just given us a wealth of operating data. And the form factor that we have as well allows us to iterate on our product very quickly, make improvements that enhance the operational performance of our batteries, and allow us to get products that are in the market, meeting our customers' needs, are reliable, are low cost, and providing what our customers want much more quickly than any of our peers can do. Our chemistry is unique also in that it has both one of the lowest materials cost profiles as well as one of the highest energy densities across any non-lithium technology. We have up to 3 times higher energy than the nearest competitor in the space. That allows us a very compact and flexible form factor. Our battery is a compact modular system that provides a great deal of flexibility from small commercial and industrial scale deployments all the way to utility scale. We also have an advantage in that because of our modular compact form factor, we can build systems that are essentially ready to be deployed for our customers. We can ship them in a containerized solution that they can just drop in place and get up and operating without a lot of on-site construction work that other technologies in the non-lithium space tend to need to have. We also have some pretty unique features. Our hibernation mode is very well suited for some of the resilience applications we're seeing come up in places like California. It provides a really competitive feature when it comes to building longer duration systems that can meet longer and longer energy storage needs from our customers, because we can stagger battery deployments and how batteries are operated. So we've got a really unique feature set paired with a very competitive cost profile of our batteries, a very high energy density, the best operational experience in the industry. Oh, and one other thing I didn't mention too is the safety profile of our batteries. Our batteries, they do not have the same risks that lithium-ion batteries have in terms of catching on fire. And that has been a big selling point as we seek to, as we start to have more and more conversations with both U.S. utilities as well as with very large energy buyers here in the U.S. as they seek to put batteries in to provide resilience. They don't want to bring any unnecessary risks with that, and so that's a real selling point for us in the market. Next slide, please. Mention some of those selling points and our move towards larger and larger deployments. That's really reflected in our commercial strategy today. As Tim mentioned earlier in the discussion, we've been building partnerships and relationships to be able to drive larger system sales, both in the commercial industrial space, which is one of our core industries that we've been in for some time now. In the telco space, also been one of our core sectors that we've been working in historically. We're just doing larger systems now than we historically have. We're moving into doing more remote and community microgrid systems in megawatt plus hour scale solutions to meet resilience needs, both for local communities, for end use customers who have a critical load that they don't want to be subject to, frankly, power systems that in many parts of the world are becoming less reliable. And then we're also very much active in the utility scale space, where we're looking at large grid scale deployments that are front of meter deployments to provide non-wire solutions and central generation solutions for many customers who are looking at energy storage as a substitute for fossil generation. Tim, anything else to add to this?
No, I think we encapsulated it there. I mean, I think as we said before, some of those building blocks that we've established around our energy pod that we're launching into the market, the reference project that we have now with Energia, and our ability to immediately scale to meet demand is allowing us to play in these larger deployment opportunities. We probably didn't have 18 to 24 months ago to be credible in those kind of spaces. So we're very excited about the increasing interest in flow batteries and non-lithium solutions. And based on some of those factors, I think we're well placed to be able to capitalize on the opportunities in these markets. Back to you, Mark.
Thanks. So I think the last thing to say about this slide is, we're really focused where the true markets for energy storage are today. Right now, the United States represents 50% of the global market for energy storage. California is 50% of the US market. We have a solution that is extremely well placed in those markets that represent the largest volume sales in energy storage today. And we're also very well placed to be able to take advantage of some of the grants, subsidy programs, non-dilutive funding opportunities as we scale up to meet the need for the markets that have the greatest demand within the energy storage space today. Next slide, please. So we've hit on a lot of these already. Just to kind of hit on them again, customers are choosing Redflow because of the safety, the operational track record that we have, some of the unique features that we have, very modular, compact, flexible approach we have to deployment, the very competitive profile we have from a cost standpoint, and also our sustainability track record. We've got a very sustainable product that doesn't have a lot of the challenges around recycling that a lithium-ion battery has. Next slide, please. So just to kind of reiterate what our strategy is, as the market for energy storage scales up, we're scaling up as well. We are focused on deploying larger and larger projects We're focused on the markets that have the highest opportunity for growth, and that's primarily the US and Australia over the next few years. We are selectively looking at opportunities outside of those markets in Europe, Latin America, Southern Africa, Asia, but we're doing a lot of active outbound business development activities in the US and Australia primarily. We're very focused on developing relationships with deployment partners within those markets. We're very focused on getting more and more megawatt hour scale projects deployed in those markets. As a result, we're also focused on how do we optimize our own supply chain and manufacturing capacity to be able to provide the lowest delivered cost solution within those markets where we're selling product today. And we've got a goal of significant manufacturing ramp up to support those markets. We believe we're well placed to be able to provide 500 plus megawatt hours of manufacturing capacity per year within the 2025 timeframe. Having manufacturing capacity in that scale will make us very, very cost competitive with all the other solutions that are in the market today. We've got some goals around sales to help support that, but we definitely see some fairly significant multi-megawatt hour projects coming within the next 12 to 24 months. And then in 2025 and beyond markets or a time frame, we see ourselves being very competitive, not just in the C&I space, but also within the front of meter utility space. And we see ourselves being capable of multi-hundred megawatt hour deployments in the US, Australia, Europe, rest of the world. Anything else to add, Tim?
Look, I think just adding to that, I'm sure some of the eagle-eyed people on the call would have sort of totaled the selected pipeline that we showed a couple of different slides ago, and clearly we want all of those to convert, but some will and some won't. But when you look at the magnitude of the opportunities that we're looking at there, it's a step change, I think, from where we were 12, 18, 24 months ago. And we do want a blend of short-term opportunities that is going to help to drive kind of short-term revenue. But we also want those wins to be catalysts for further success in the market. So that's really important for us to make sure that the deals that we are focused on and putting discretionary effort into are going to lead us to further success in terms of execution of our strategy. And I think we've got a great mix there of large-scale, high-profile, blue-chip customers, and also some short-term sales opportunities that's going to drive revenue over the shorter term as well.
Thanks. Next slide, please. So one of the areas that we wanted to highlight is the work that we've been doing over the past year to develop relationships with large engineering, procurement, and construction firms. We have managed to cultivate some relationships with some of the top EPC companies in the world. This is going to allow us to be able to deliver large-scale turnkey products. Our customers, our end-use customers, they don't want batteries, they want an energy solution. And by partnering with EPCs, we're able to work with people who can bring together all of the construction experience, the ability to integrate in renewables and other technologies into a solution set that they can provide to a customer on a turnkey basis. So we've been working with a number of EPCs to be able to deliver these kind of solutions. We've entered into and we're negotiating master services agreements with them to be able to support those deployments of portfolios of projects. We are working on becoming fully qualified vendors for them, where they view us as their go-to solution in the non-lithium space. That's really helping us accelerate sales opportunities. We're getting inbound leads now directly from customers, but we're also getting a lot of inbound leads now from our partners as a result of this work that we've been doing in the space. And then they're also able to then build us into the design phase of new projects. We can jointly develop turnkey solutions that really help kind of solidify our position within projects that are being scoped out and differentiate us from competitors and become something that goes kind of beyond a commodity product that can be swapped out with other vendors.
And I just add to that is, the key thing that we're seeing here is, the potential for these EPC companies to be a strong channel to market and also develop us as core to their overall renewable energy solution. So that's going to reduce the friction of sales effort on our part. And we've got some very strong companies that we're very excited that we're engaged with at the moment. And Mark and I are spending 2 weeks from next week onwards in the US to strengthen and build those further EPC relationships across the country. Next slide, please, Ron. So just to summarize, from where we see today, I mean, it's pretty clear that energy storage, the importance of energy storage and the shape of energy storage is moving and accelerating, and it's moving towards us. And increasingly, we're seeing those inquiries of people starting to look beyond lithium, as Mark spoke about before. As reflected in our pipeline, we see some great opportunities there with some great blue chip names that we think will have a really strong catalyst effect, like the Energia project did, for further success in the market. And we want to start to build some of those high visibility deployments that we think will lead to more success in our target markets. Gen 3 is important to us, as we've said many times. That's been slightly delayed by COVID, but we're on track for deployment by the end of this financial year. And we'll continue to extend that technical and operational and commercial leadership to make sure our product can be as best as it can be. And as Mark said before, we want to be ready to scale to meet the opportunities. We now have our Thailand facility that can do between 48 and 60 megawatt hours to scale up to that. But increasingly, we're looking beyond Thailand as we start to lean into some of these multi-megawatt hour opportunities that, while they have a longer sales cycle, want to know and show that we have the scale-up capabilities to meet that level of demand. So we're very excited about where we are. I'm delighted Mark has joined the team and is leading our efforts in the US and as our Chief Commercial Officer. And I think we're very well placed to capitalize on the market opportunity and some of the sales opportunities that we showed to you in the slide deck today. Ron, what I'd like to do now is just open up for any questions that any participants might have.
Thanks, Mark, and thanks, Tim. Maybe we've got a bunch of questions that are already lined up, but maybe we can start with, maybe we can start with Mark. What attracted you to Redflow?
That's a great question. So I know the energy storage market really well, and I have played a role kind of at the market creation phase of things for some time now. I was senior leader of the California Energy Storage Alliance for years. I worked on energy storage strategy for large IPPs, for utilities all around the country. And what really attracted me to Redflow was that I saw this hidden gem of a company in the market that has been quietly executing, quietly delivering top-notch projects for customers all around the world in a space that has so much potential and is the largest source of growth within the energy storage space over the next decade. Made me very excited about the opportunity to come help shape the company's future and access some of the largest markets in the world here in the US for energy storage. I can't speak highly enough of the leadership team that Redflow has been able to put together throughout the years as well. And I came on board with high confidence about the technology, that it was really well placed for the market opportunity here in the US and globally, and that the leadership team is extremely well suited for the growth phase that we have ahead of us. So those are all reasons why I came on board, and I just have to reiterate, I cannot be more excited about the path that we have in front of us, and that we're ready to take on this challenge.
Thanks, Mark. Tim, maybe a question for you. We've had a few people ask about this. We're currently in the Australian federal election cycle. Without predicting the outcome of the election coming up in a couple of weeks' time, what does the current government staying versus a new government coming in mean for the company in terms of opportunities? So, for example, the Labor Party's talked about its community battery project. So how is Redflow looking at the opportunities that may or may not arise off the back of the election?
Look, to varying degrees, both parties are committed to renewable energy targets, and Labor's announcement about the community battery program is certainly exciting and something that we feel that we could kind of participate in. And so, but I think beyond federal elections and which party is going to be government next year and the shape of that, I think the drivers for us as a company, both in Australia and more broadly, are continuing. It's both from a corporate level, where we're seeing lots and lots of drive for sustainability, customers looking beyond lithium and committing themselves to that kind of net zero future. And we want to sort of leverage the some of the opportunities that the federal government and state governments might provide to us, but we're not dependent on that for our success as a company, I would say. We've talked about the US a lot, that it's got a highly enabling environment for us in California and other states around non-lithium based solutions. We're still, we're a proudly Australian company that's going global. We do want to have a conducive and supportive environment, both at the state level and at the federal level, for energy storage and and governments supporting non-lithium based homegrown solutions. And we're continuing to kind of play that card. So in summary, either party that comes in, we think the future is going to be pretty bright for us in Australia and beyond.
Thanks, Tim. And maybe, I don't know, question for either of you. So you talked about Energia and the work that's currently being done on the 6 megawatt hour project off the back of the 2 megawatt hour project that's been installed and running. Can you give, and a few people have asked this question also, can you give people a bit of an update on how the 2 megawatt hour project is going? And I assume clearly you wouldn't have been speaking to them about a project 3 times the size if it wasn't going well, but can you give an update on the existing project that's in and running at the moment?
Yeah, why don't I comment on that and allow Mark just then talk about the further project and where that's at with Energia. So, all in all, the customers and the stakeholders around that 2 megawatt project in Rialto are delighted. And I think we've built up a really strong working relationship with the engineering team there. Just to reiterate to participants on the call, the Rialto site where our 2 megawatt hour project is Energia's largest waste to energy plant. So it's taking general food waste and turning that into recycled gas. And so that project has now been delivered. We launched it in January. The stage we're at now is our team is working with the team from Energia and the team from Siemens to integrate our solution into the Siemens microgrid controller. So that's a microgrid controller that's basically managing all the energy inputs across that facility to optimize that performance. So that's where we're at now. Look, I think from where the stage of the overall capacity of that plant is, we're going to start small, or Energia wants to start small in terms of use of that system. But they're seeing some quite strong growth and demand for that plant. So as the machinery of the plant increases and the energy storage requirement increases, our system is well placed to kind of to adopt that. And looking more broadly, we've had some interesting discussions with Siemens today. They're starting to look at non-lithium based solutions. And so that as a poster child for us, not only in terms of our battery at 2 megawatt hours, but also being able to work with, market leading microgrid controllers and EMS systems is also important to us. Mark, if I can kind of turn over to you to give a latest update about that Victor Valley project.
Yeah, thanks, Tim. So, there's no greater vote of confidence in a customer's view of you than coming back for a second project. And Energia entered into an LOI with us earlier this year, as you're aware of, to complete a 6 megawatt hour energy storage site at another one of their bioenergy facilities called Victor Valley. The Victor Valley project is actually going to be a solar plus storage microgrid. The goal is to provide as much renewable energy to the facility, which has a constant base load over the course of 24 hours as they can with the solar that they have on site. We ended up bringing one of our EPC partners that I mentioned earlier to the discussion with Energia. We have an exclusive arrangement with this EPC provider so that this will be a Redflow battery solution for it. And they are working together to finalize the terms of the project development effort that will be going on there. Now, it is a large installation that is a greenfield site, so they have to get some discretionary permits from state permitting authorities. They have to get an interconnection agreement in place with the local connection authority, the network operator in the United States operating that particular area. So there are some development activities that need to happen before we'll be receiving any sort of firm purchase order for the batteries. But we have a commitment from both Energia and from our EPC partner that the project will be using Redflow batteries once it happens. So that's where we're at right now with that opportunity. It's a really exciting one for us, and it's just great validation that we're a great fit for this exact type of project. in this market here in California that has so much support and where there's so much interest for energy storage. These are both opportunities to bring in more renewables to customers throughout California, as well as they are backed by the state of California's desire to have more resilient critical infrastructure. So, you know, all these projects that we see in California tend to have access to funding that helps make them even more attractive to customers to put in. So big opportunity for us. This one is very representative of the type of opportunities that we're seeing in California going forward.
So you mentioned, Mark, about there's so much support and interest. I just want to touch on the word support, and you did talk about it when you were doing the slides around government initiatives, both in the US and Australia. Can you give participants a bit of a sense of, well, what support is the government giving, whether it's grants or funding for large projects, or whether it's energy subsidies that have been talked about in Australia? And how is that assisting the growth strategy that you're executing, and what does it mean for Redflow?
Absolutely. So I would say that there are two primary forms of direct support that we're seeing from the governments in the US and California. One of them is the investment tax credit, which provides an offset to some of the cost of energy storage systems when they are paired with renewables. That is a large incentive for energy storage to be going in renewables paired applications in the US right now. Within California, we are seeing state incentives in the form of what's called the Small Generator Incentive Program, which provides a subsidy to developers who are putting in projects in commercial, industrial, and residential settings. That helps reduce some of the capital costs that we have for our systems and improves the payback period, which is already quite attractive based on the rate structures that we have in the state of California, which tend to have a very large peak versus off-peak differential. That tends to be the key indirect driver that's causing so many customers in California to implement energy storage in the system. As we have more and more renewables on the grid, the rate structures have been changing so that during the middle of the day, when you have lots and lots of solar on the grid, the energy cost is very low. And when there's not much solar on the grid, energy, in particular in the evenings, energy costs are very high. So customers want to have a way to store up all that solar power during the middle of the day, discharge it during the evening to offset very, very high energy costs. And the payback period for that in many different customers and rate structures is quite fast.
Tim, anything else to add from your perspective?
No, I mean, look, you know, we see lots of opportunities for support, not only in California, but also here in Australia. But you don't base your strategy around government support, I think, is what I've found over the years. And so where and how we can find government support to do things that we want to do and our customers want to do, that's value accretive, we think. And so, you know, the engagements that we are having in Australia, I think certainly lend itself towards the potential for further government support as the government looks towards beyond lithium, and particularly around that kind of medium energy storage duration mark. I think that reflects, though, and I've reiterated this a couple of times, is our trajectory as a company is starting to move away from smaller deployments to larger deployments. And as we're starting to see some opportunities that we've talked about in the pipeline, the credibility that the energy deployment is giving us to go and lean into those larger scale, larger size projects, combined with that kind of operational history, combined with that kind of a Thailand manufacturing facility scale up, and also combined with things like UL certification that we're progressing in the US, we think puts us in a very exciting position that hopefully, you know, we think is going to be exciting to our customers, to EPC companies, and then hopefully as we go through that process, government support to support specific projects, and also our ramp up is also in front.
That's a great point. And just kind of one other thing to add to that, you know, the energy transition megatrend, it's a real trend. We are, you know, as Tim pointed out, we are trying to make sure that we're not in a position where we're dependent on any form of government support for continued deployments. But the fact of the matter is that as more and more renewables enter the grid around the world, more and more energy storage is needed to support that, and longer duration energy storage is needed to support that. And renewable energy is now the cheapest form of new generation, definitely in the United States and in many markets worldwide. That megatrend sees, there's no sign of that slowing. And as I said, more and more generation goes in that's renewable, it's intermittent, more and more energy storage will be needed to support that. And we're trying to capitalize on the markets where those trends, are most advanced.
Just quickly before we run out of time, there's been a number of questions that have come through around the Gen 3 battery. Can you give an update on how that's going and sort of where things are at?
Yeah, so look, we're on track for the introduction of the Gen 3 battery into the production environment by the end of this financial year. We've had multiple engineering teams up in Thailand to support the introduction of that Gen 3 battery, and as we're starting to change some of those processes around Gen 3, that's starting to look really good. I think investors will know previously, we did face some challenges both in terms of supply chain and actually just travel of our engineers to Thailand during the COVID period that set us back by a number of months. But in this new environment, that's all on track. We're very excited about the results that we're seeing for that. And I probably would just iterate, this is not a complete change of our manufacturing processes. We're really only changing about 20% of the manufacturing, particularly around our stack manufacturer, as part of the introduction to Gen 3. So we do think it's a very kind of risk-managed introduction that we are doing. I think we have some grey hairs about managing that process appropriately, but I'm very delighted that the progress that we've made, particularly over the last kind of 2 or 3 months, and we're on track for that introduction by the end of this financial year.
So we're a bit over time now, so maybe just final question. There's a lot going on in terms of, and you said probably 12, 18 months ago now, Tim, you talked about the US market as being a key opportunity. You've hired Mark, you're expanding the team. You've got some, the Energia battery solution in California working strongly. You've got a repeat work going on with them. You've got a number of big things in the pipeline. How are you managing all those opportunities, and what most excites you about what you're seeing ahead?
Look, I think if I take the reference point about what's excited me from where we were 12 to 18 months ago, maybe I can kind of anchor it like that. The thing that's excited me at the moment is that kind of thematic about people looking beyond lithium. I think Mark mentioned some of the RFPs that we have been receiving are exclusively focused on flow batteries, which is exciting to us because it's a market validation opportunity. The second thing that really excites me is I think the profile of some of the opportunities that we are working on at the moment have the potential to be a really strong catalyst for further market validation and interest in the market. Needless to say, if 1 or 2 of these on progresses to orders, we think the halo and reinforcement of us as a viable medium-term, large-scale solution is going to be incredibly accelerated. So that really excites me about conversion of those opportunities and get that running. Those big multiple megawatt hour opportunities, they're not going to happen overnight, but the projects that we're focused on to get those started with some of those customers is what we're kind of focused on. And I think the third thing that really excites me is the team. We've worked really hard to get to where we are today. We've got those foundations that we think no one else in the non-lithium space has got compared to us. And we've got the right team to capitalize on those opportunities. So look, I'm hugely excited about the future. The market is coming towards us. We've got the right products, the right team, and we've got the right opportunities to take this company to the next level.
Tim, thank you. Mark, thank you. And for everybody on the line today, thank you for participating. I apologize we weren't able to get through everybody's questions, but I tried to do as many as we could, and happy to answer questions separately if you have any further questions. So thank you very much, everybody, for your time, and we'll have a good day, and we'll hopefully see you all soon. Thank you.